Hello, everyone, and welcome back. Today, we're going to go over federal taxes and specifically for your W 2. I know everybody at the beginning of the year, as they're filing taxes, they may see that they owe a huge tax or have a huge tax bill on their hand, and a lot of the reason could be uh, fi- uh, filing your W 4 incorrectly or filling it out incorrectly. And I created this spreadsheet to help everybody just get a sense of what their true tax rate is on their W 2 wages. As you can see, I've broken it down into the different filing segments: single, married filing jointly, married filing separately, and head of household. So typically, when you see the tax brackets, and let's say somebody's making $50,000, they're in the 24%, the 22% tax bracket. Most people assume, okay, 22% of my wages are getting taxed. That's not true. So what you have to do is you have to remember that you get the standard deduction. Most people now, since the Trump Tax Act doubled the standard deduction, most people from now on are only going to get the standard deduction. You're really not going to itemize anymore. Excuse me, trying to get over a cough. I swear I do not have the coronavirus. So, and the good thing is we're not talking face to face. So, you will see that the way this spreadsheet breaks it down and the way you really should look at your wages is if you, let's say you're making $50,000 a year and you're single, you also get $12,400 automatically taken off the top of that as your standard deduction. So your taxable wages are really only $37,600, not $50,000. And so the first $9,875, I should add, these are updated for the 2020 calendar year. So this is what your taxes will be paid for this entire calendar year and what you will owe April 15th, 2021. So your first $9,875 is taxed at 10%. So that's $987.50. The next $27,725 is taxed at 12%, which gets us to our 37,600%. That 12% represents $3,327. So your estimated tax, if all you had was $50,000 of W 2 wages, would be $4,314.50, with an effective tax rate of only 11.54%. And to get to that, you weight the average. So $987.50 divided by $4,314.50 times 10%, and so on and so on. And you sum all that up, so you get 11.54%. So if you take a look at your pay stub, you should look and see what your federal taxes are being taken out, and you should compare that. There should be a section on your pay stub where it says something along the lines of like total taxable wages, not gross wages, but total taxable wages. And what you should do is take whatever your current federal amount is being withheld and divide that by the total taxable wages and see what percentage you get. If you come in under this percentage on this spreadsheet, you need to look into having more withheld from your paycheck. I know a lot of people don't like to hear that, but if you don't do that, you're just going to have a bigger uh, tax bill at the end of the year, and nobody likes that. Now, if you're withholding more, so if you're above, for this example, 11.54%, you're taking out too much. You're just giving money to Uncle Sam for free, and they're using it freely. So what you need to do is, obviously, you need to lower your federal taxes that are being withheld from your pay stub. Get with HR. I hope everybody's HR departments are friendly. They should work with you in being able to walk you through how to adjust your W-4 to arrive at what should be taken out. And as you'll see, the next step, we have married, filed, and jointly. As you'll notice, married, filed, and jointly gets a bigger standard deduction. It's double the single. So their effective tax rate is only 10.5%. It's actually less than a single filer. Married, filed, and separately is exactly the same as a single person. And then head of household gets a little bit bigger of a standard deduction. So their estimated tax rate is only 11.19% compared to single and married, filed, and separately 11.54%. Excuse me. I'm gonna put my email address in the description of this YouTube video. Feel free to reach out to me. I'm giving this out to everybody for free. Hopefully this is a beneficial tool to everybody, just to help everybody get their tax bill as close to zero as possible, so that you don't owe anything, you're not getting a big refund, because really when you do get a big refund, you're losing the time value of money there, because it's just sitting in the federal government at a 0% interest rate, which you could be using throughout the year. So I hope everybody enjoyed this video. Click my link in the bottom right hand corner to subscribe for future videos. I hope everybody has a good day or a good evening.